Hi, YouTube. This is Alexis with By Alexis YouTube. I am back today with Micah Greene, and he is a lender. So he is going to tell us all about the lending process. I know this is something that I get asked a lot from first-time home buyers, and I, of course, can't answer everything. So I got the help of him. So I'm going to let you take it away. You can explain about your company and go from there.
Hi, how you doing? My name is Micah Greene. I'm with Homestar Financial. We're a mortgage lender here. I'm like located right here in the Charlotte area. The company branch location, corporate locations in Georgia. We're licensed in about 30 states, so we will be able to help um, you with your mortgage experience throughout the process, depending on what state you live in. Just to give you a little bit of background about the process, I know Alexis talked about that. Every lender is a little bit different, but just to give you an idea, so typically you do want to make sure, because of course your credit. The biggest thing about credit is not so much of the score. The score plays a huge part in the approval, but it's actually your credit profile. And a lot of people I speak to, I let them know it's the credit profile, meaning if you show the ability to repay your debt on time, you will be approved. And so a lot of people say, "Hey, what's the minimum credit score?" Minimum credit score here at Homestar Financial is 620, but just because you have a 620 credit score doesn't mean you're going to get approved. Doesn't mean you're not going to get approved either. So that's just the start of it. So again, it's your whole credit profile because you can have a 620 credit score with, I don't know, just say 5 late payments within the last 12 months, so you're ineligible. So it's not just the score. So I always would tell people it's not so much of the score, it's the profile. So some people have lower scores because they don't have revolving debt. So some people just never established credit, different trade lines on their credit report. So that's one of the things that I speak to a lot of clients and say, hey, it doesn't matter where you're at today, you want to always contact the lender so they can at least look at your situation and advise you what you can do for tomorrow. So the last thing you want to do is try to do everything on your own because again, you may pull your FICO score and it may be, I don't know, 650, then I may pull it and it may be 600.
Yeah.
So we use different FICO models, especially with mortgage. So we use a mortgage FICO, which is something that unfortunately on a consumer end, nobody can access that. So that's why your scores ought to be a little bit different than what we pull on our end. I think that's the biggest thing. So one of the things about Homestar, we're a full service lender. So I mean, we have all the loan products from FHA to VA to conventional to USDA. So we pretty much have everything for investment properties, condos. We do manufactured homes. So we have multiple programs for multiple people. So we don't try to put nobody in one specific bucket. We try to look at their situation and kind of come up with a game plan for them.
Okay, so how would a buyer get started on getting a loan?
So I think the first step is, of course, call you or me, right? So complete an application. I always say it's easier for them to complete an application online. I pull an application, run everything, kind of see what we need to do. Then we schedule a time to speak. And we speak, we go over the options, whether those options are loan options. We go over purchase price as far as the max purchase price. I kind of go over payment, and then I go over down payment and closing costs. So that way I could give you a full, idea of what you can do when you're able to do it. So again, you may not be ready today to purchase, but you want to at least have an idea. So when you are ready, you know what you need to do.
Exactly, because when you come to me and I ask for your pre-approval letter and you're confused, well,
Yep.
no actual realtor is going to show you homes if we're not sure you're approved or how much you're approved for, because we can show you a home that's $200,000 and you may not even be approved for that much. We're just getting your hopes up.
Right. So we don't, definitely don't want to get nobody false hopes. And again, I know you just like me. I don't like, to kind of prey on people's emotions, right? So, and then there's money involved. So, emotions and money is a combustible mix. So,
Exactly.
so yeah, we want to make sure we give everybody a full idea of what they can do when they can do it. And everybody's time is a little bit different, right? So somebody may be ready tomorrow. Somebody maybe kind of ready next month or next year. So, at least, we want to arm you with the information that you need in order to get you where you want to be at.
Right. So now, could you explain the closing costs? Because I do have people ask me about that, and I have my sheet that I walk through and look through and make sure things are correct and things like that. But on the loan side of everything,
Okay,
how does
so
that work?
closing costs is going to be your lender fees, your attorney fees, and your escrows. So your taxes and insurance. So all of those consist of your closing costs. So several parts. So just say with us, our lender fee is a flat fee of $12.95. Then you're going to have your attorney fees. Attorney fees is typically, I don't know, $1,300 to $2,000. 1,300 to $2,000. Then you're going to have your escrow. So your escrow is your taxes and insurance. And depending on when you purchasing, or I would say, depending on when you're closing, it's going to determine how much months of each that we need to go ahead and provide. So actually, that's a cost again that the buyer will have anywhere. So one of the things about Homestar, we don't have a lot of junk fees. Like I said, our one fee that we actually have is a lender. Our lender fee is $12.95, which is standard whether the loan is 50,000 or 500,000. So a lot of times, some companies use origination fees as far as 1%. So that can range. One of the things that I feel like, hey, I like everything to be, kind of across the board. So we got that one fee, but so the fees could range depending on purchase price. I mean, the fees can range from, $2,000 all the way up to, $10,000. One of the additional things you have is discount points, which is typically may be included. And the way discount points work is, so a buyer is approved for a loan, depending on their credit score, that kind of credit score is going to determine their interest rate. So they say, the interest rate is 3.5%. Now the buyer has an option to kind of buy down or use discount points to buy down to get a lower interest rate. So depending on somebody's scenario, their situation, uh, it may be beneficial for them to buy that interest rate down to get a lower interest rate. But the way it works is it's not a set number or a set amount. It's different in everybody's, depending on credit score. So, for one person, it may cost them, I don't know, $4,000 to buy from 3.5 to 3%. It may cost another person $2,000. So it kind of depends on the loan amount and their credit score in regards to how much the discount points cost. And now going to the discount points is something that we have is called lender credit. So that's the same scenario as the 3.5% interest rate that buyer qualifies for. What we can do is say, well, you know what, the buyer is short a couple of $1,000. We could potentially raise that interest rate to say 3.875 and be able to give that buyer what we call a lender credit by increasing that interest rate. So
Oh,
that's very helpful too. So in somebody's situation, they say, well, you know what, I got, they need $8,000, but they short $2,000. I said, well, you know what, I could raise your interest rate to 3.875 or 4% and give you $2,000 worth of credit.
okay.
So a
So,
lot of
well, how much should somebody bring to the table? Like, how much would they need to save up for a deposit?
so I would say it's different and depending on the loan type. So I'll just say FHA is minimum down payment requirement is 3.5%. So you definitely got to have that. So rule of thumb, I always say with an FHA loan, you want to have 5%. So that's 3.5% that you have to put down, and then you got 1.5% for your closing costs, and hopefully the seller pays the rest. So
Right. Yeah.
so rule of thumb, I'm gonna say FHA loans 5%. USDA loans, as you know, is 100% financing, so no money down. So in that situation, if the buyer can have 3% of the purchase price, that may be enough for the closing costs. Or if the seller could pay the closing costs on that particular deal, that would be great too. So VA loans, 100% financing also. So you always want to have some funds. This is just impossible, even with down payment programs and grants and things like that. So it's impossible not to put anything into a deal and expect to purchase a home.
Right, exactly. Okay, now as far as the types of loans, you have FHA, USDA, you have, of course, VA loans, conventional. What about loan programs for like teachers and doctors and,
Yeah.
government agencies? What about that?
Yeah, so we do have a loan program for teachers, which firefighters is called. I'm not sure if you're familiar with the Good Neighbor Next Door program. So we are affiliated with that program, and the way that works is, if you go to the HUDHomestore.com, you'll be able to access those specific homes that they have available. So that's one, and then some of those homes they'll be able to get them for 50% off, so half the price. Now with that program, if you're not a teacher or a firefighter or someone like that, you can still purchase those homes, believe it or not, for $100 down payment. So there's a great program that a lot of people don't use, which is like I said, the HUD foreclosure program. So it's $100 down payment. Doctors, we do have doctors loans. They're not as in vogue as it used to be a while ago, but and basically, the way the doctor loan works here is we have that program, and we can use future income to qualify a doctor. So just say, I don't know, the doctor is, coming out of medical school. He's going to probably, work at one specific job for a year, and then after that year is over, he's going to go to another job where he's going to get a substantial raise, right? So we can actually use future income to qualify that doctor,
Okay.
and that's kind of how that one works. But yeah, we do have those type loans here. Yes, ma'am.
That is awesome. 'Cause, yeah, that is a program that not too many people know about.
Mm-hmm. Mm-hmm. Yeah, good program, especially like people coming out of school. So if you're in school, you're a doctor. So you don't have to necessarily be out of school, and you can still purchase a home. So teachers the same way, where that HUD foreclosure program, I think, is a great program for them. You don't see a lot of the 50% off homes. It's called special, but you don't see a lot of those. But just the ability to purchase a home with $100 down payment is awesome.
It is. So let's say a person has their pre-approval letter and they are all set to go. They put an offer on a home. What's the next step when it comes to because I know my side and what I do and the
Yeah.
closing attorney, but what do you guys do on your end?
So once you guys get under contract, send me the contract. What we do is order the appraisal, send the file back to underwriting, let them know that, hey, we do now have a subject property address. Typically, I like to have everybody before this point, the employment verification is already completed. So all we're doing now is, again, requesting the appraisal be completed. Once we get the appraisal back, we kind of lock the interest rate in that point, kind of go over closing costs, how much money the buyer needs, kind of make sure all of that is kind of settled in. But after that, it's, we get the appraisal back, just say the appraisal comes in good, no, comes in at the cost sales price, and, no repairs needed. It's really downhill from there, to be honest. It's kind of checks and balances where, especially right now, we do several employment verifications throughout the process. At this point, dealing with what we're dealing with now with the pandemic, but we do another employment verification. We do stuff like, in the background, we do a credit refresh to make sure that the buyer hasn't, purchased something else during the process. And once we kind of get all of that stuff taken care of, we actually just send, the closing package to the closing. We, of course, clear the files, send the package to the attorney, um, and you guys sign at the closing table. So it's really downhill once that buyer is pre-approved, and under contract. Of course, we do reach out. We're going to need stuff like bank statements or maybe updated pay stubs. So don't get me wrong, we will need those small things, but typically that process is really downhill. Everything else is in order.
Okay, well, since you mentioned the pandemic, how have things changed? I know that the credit score has changed as far as your like the minimum. And I've
Yep.
even heard of deals completely falling through because of the pandemic because people have lost their jobs and things. So, I
Yeah.
mean, you guys have something in place? I mean, what steps are these companies taking, really?
No. And I think that no. I mean, the good thing I would say about the pandemic has been, um, to decrease in interest rates, right? So interest rates is at historically low rates right now. So it's so the actual mortgage side of things has been pretty good. I mean, I would say, I mean, I know for myself personally, it's been a great year so far, probably one of my greatest years ever in the business.
Right.
So, and some of it's key through the pandemic because since interest rates are low, you got more people refinancing. You got more people actually moving, which I didn't think would happen, but what's happening is people's moving from congested areas to the country.
Okay.
So yeah, so people are actually doing so they're moving from the city to the outside, or they're actually saying, you know what, you got people doing a lot of home refinances because they're doing a lot of home remodeling since they're going to be home a lot. So
Right.
they're taking cash out using the equity they have in their home, taking advantage of that. Then you got a lot of people that's actually purchasing homes. They're selling their current home and purchasing another one because the interest rates are so low that they could literally get a bigger home, so to speak, and pay exactly what they was probably paying with their current home.
Right.
So a lot of people is taking advantage of that situation. But yes, you're right. A lot of people have been losing their jobs. Credit score minimum has increased. It hasn't really affected, I think, a lot. I think the numbers are skewed because I would just say a lot of my, I would say I haven't lost a buyer. I'll put it that way, knock on wood. So I haven't lost a buyer yet that it affected. But yeah, a lot of people is taking advantage of it because of the situation too. They are, and everybody's essentially, but a lot of people have, yeah, it seems like more and more people have been working more actually now than it was previously. So, meaning more hours at their job. The job is giving them stipends to come in, I guess, right? So,
Yeah.
extra pay, things like that for working during this time. So, a lot of folks has been taking advantage of that, putting that money away, saving it, and using it to purchase their home. So, but it's nothing that we have in place besides, like I said, employment protocols as far as verification is done typically probably like 4 times where before it was only done once. Um, and again, as a lender, you want to just contact the buyer, just make sure that as you speaking to them, going over everything, that you let them know, hey, you just ask them, hey, do you think that you're in jeopardy of potentially losing your job? You know, so you want to have those open, conversations up front. That way, you and the buyer kind of have an understanding because again, we don't want to, waste nobody's time or their money. So we don't want them to lose money. So that's the biggest thing. So we just, if they don't feel like they're in a secure situation, I would say, hey, let's wait it out. But it's been good. I mean, like I said, it's been great. This is a great time to purchase. It's turning into a buyer's market. Um, you know, the homes are, you see actually, like I see more homes seem like it's available. New construction is going bananas right now. So I mean, they're just building and building and building. So I tell anybody, the time is now. If you can take advantage of it, definitely look to purchase.
I know here on the coast, I mean, people have been coming in and, buying land to build houses.
Yep.
Yeah, that's big here. People who want to build second homes, who
Yep.
live in Charlotte, who want a second home here on the coast. So
Yep. So you got a lot of people, like you said, a lot of people looking to, take advantage of those type of areas. Again, that's why a lot of people looking out there to purchase homes because, everybody's kind of quarantining, so to speak, but it's always great to quarantine somewhere nice. So,
yes,
so,
absolutely.
so I can't knock them for it. So yeah, they're taking advantage of those situations. Yes, ma'am.
Awesome. So is there anything else you want to mention?
No, I mean, just the normal. I mean, everybody, I would say everybody's process is a little bit different. So, everybody's experience is a little bit different. So, everybody's situation is different. So, what I try to tell people, don't listen to what, you may have a friend that told you their experience was horrible. You may have, and yours may be perfect. You may have a friend that tell you their experience may be perfect and yours might not be as great, right? So, the experience sometimes is going to kind of be, I would say, on a buyer, but it's on that person's situation, right? So you got a unique situation, you got to expect a unique experience. So, and we try to make that experience as less grueling as possible. But again, like I tell people, it's life too. Like obstacles come up, and as long as you're willing and able to overcome those obstacles, I mean, 9 times out of 10, we will, because I don't put anyone under contract unless I'm literally like 90, 95% sure that they're going to close. So I would say, hey, we may have some obstacles that come up, but that's part of the process. Don't get discouraged. And again, if someone's looking to purchase, don't wait. You don't, I tell anybody, you don't wait to purchase, you purchase and wait. So if you want to do it, go forward and do it.
Absolutely, because somebody who has gone through the process and who does have the approval and who does have the money will buy the house you want because
Yep.
they already have it. You're waiting.
You're waiting. Yep. So that home that you said was your dream home is off the market now.
Yes,
And
within days.
like I know, they go off the market pretty quick. So
Absolutely, I think the fastest I've had has been 3 days. So
wow.
yeah,
Yep.
yeah,
So it's a you got to have your stuff in order. That's why I say it's easier to start the process. I mean, if you're looking to purchase in October, you don't start the process in September, right?
right.
So start it now. That way you can have your ducks in a row. You know exactly what you can do, it can't do. And that way, when October comes, you're ready, because you may start it in October and then you figure out now you need another 3 months to get your situation in order.
Yeah, you're like you mentioned before. I mean, a buyer can look at that credit score, but when you pull it, it is something completely different, and they have to wait.
Yep. Yep.
So
So that's not a good thing.
exactly. I mean, that's a domino effect when it comes to hurting people's feelings. Because I'm like, oh man, I want to hurry up and find you your home, and I can't because credit
Yep.
score. So it's best to start the process as soon as you can, for sure.
Yep. Yep. So, and again, like you said, they may, think the scores is low, but let's look at the credit report and figure out why it's low. So it may
Exactly.
be low because of just old stuff, you never reestablished yourself. It may be low because you got, you know, uh, reoccurring late payments. And then if it's that situation, because everybody's situation might not be a credit, so to speak, credit counseling situation. It might be a financial situation where that buyer just might not be in a financial situation where they're ready to purchase a home yet. So let's look at that and kind of see what we need to do to put you in a right place in regards to purchasing.
Absolutely. Well, Micah, I thank you so much for doing this video with me because I mean, this has helped a lot of people, and I'm sure it's going to help so many more. And
Good.
I'm going to put your contact information down below. So if anybody has any questions, they can either comment down below or they can just go ahead and send you an email.
Absolutely.
So, yeah, I'm going to put all that down below. And once again, you guys, this is by Alexis YouTube. And of course, I'll be back next week with another interview to help you guys purchase your home, your dream home, at least here on the coast with me. So I'll see you guys next time. Bye.